Good morning all, hope you're doing okay. We had a very much a roller coaster today, but we knew that anyway the CPI data was always going to throw things up and down. Gold and oil moved a lot and the dollar moved a lot as well, but we can see what's going to happen to the dollar with a fairly good degree of confidence because we can just look at the yield curve, which I showed you a video in the public channel and in the private channel, so hopefully you saw that, and it's pointing towards a stronger dollar and a risk off scenario. At the big picture of risk off, the 24-hour change was very subtle. It's sort of chipping away at the big picture, but it's a subtle movement. There's the dollar being strong buy. Yen is strong sell, in case you're wondering, you know, what's happening to the yen. So the retail guys are long yen, but they're holding on and adding, and so that tells us they're adding to their longs, and that's why the yen's dumping. Even though we're risk off, I think it's punishing the crowd, and it's ignoring the fundamentals. It's just a sentimental exploitation of that liquidity. It's punishing them to get them out the casino, then the yen can start behaving normally. Because they're short, it's gonna they're long, so the price is gonna decline. So yeah, be careful. Remember 26.5 of fix. That's a key level. We're above that. It's a yearly pivot. Subtle change that explains this small value there. Hasn't really shifted on the indices. Dollar Swiss is making a buy at the big picture, the dynamic, and the euro pound is a red. Okay, so there's a euro weakness creeping in, you could argue. All that fundamental stuff in Europe as well, and that's that. There's the key. Try and get the sales to align. Hopefully that's obvious why you'd want the sales to align. You've got the high level, and then you've got your time component. So the difference between today and last week, have they added from last week? If so, it could be a good trade. Dollar yen buy, you know. Currency strips meter, dollar is firming up. So monthly, weekly, daily, H4, H1, M30, M15 is second place to Kiwi. Okay, so that's the dollar bubble there. Okay, so there's the logic for that. Oh, even here, so yeah, that's that. You can just look at that whenever you feel like it. Pound should be smaller, Aussie should be smaller. They're probably okay sizes, probably. Snapshot yesterday. So this is the new thing. So this is yesterday's snapshot, okay, and this is today's. So you can just compare. Ideally, we'd have them both side by side, but I'll do that tomorrow. So that's that. Okay, so this is how we stand today. Look at the reds, look at the greens. Have they added, or are they, taken away? If they add, then it, increases that bias over time. So let's look at German 30, 179 today, 156. So they've added long, so that makes it more bearish. Okay, so that's numbers yesterday, 156, German 30, 179. So they've gone quite a lot longer. They've gone more long than they were yesterday on German 30. So that's how you use it. Okay. S&P sentiment. What I'll probably do is do that page break. I think I can't. I'm on view mode, but I'll edit that. View, edit. I want to fix that. Let's do that. Control Enter. View again. Viewing. Right. So S&P, they bought the dip twice, so we should be falling. They went long on the US 30. See how they've gone long? They're trying to buy the dips, and it doesn't really work out for them when they do. German 30, we just talked about it just now, from yesterday and today. So, sentimentally from yesterday, it should be falling, and they've gone long. See how the moving average line is ascending, so they're going along over time, so this should be falling. Gold, very naughty. We rallied ridiculous amounts, and it probably took out a lot of stops in the process. They shorted it, and then they went long. They tried to buy, and of course when they buy, then price falls. So that's that. So I made a video on this. So it's quite a scary thing that the 2 year is a lot more than the 30-year. The 12-month is more than the 30-year. Wow, and the 10-year and the 5-year. Yeah, that's quite scary. So flight to safety near term, so it's bracing for a hard landing. and where there's probably not going to be so much problem 10 years from now, 30 years from now, but there's going to be problem near term, and that's why these are pumping. Okay. SLC update, largest movers pound USD and dollar CAD at 4% shift towards sell. The largest stock loss cluster is AU. It's that big column there, and that location is at 6705. The size is gigantic, 10%. Aussie USD. So really, according to the bubbles, it's a sell. Fundamentally, it should be a sell because we should be risk off. Okay, so sentimentally and fundamentally, it could be a good trade. Aussie USD, you know, being a short, but just so you know, after the 1st of September, this promo code will revert to 10%. Currently, it's at a big discount, so if I were you, I would do the annual plan to grab it at that huge saving. If you don't get the annual plan after the 1st of September, it's going to cost you $31 for your pro license FX as a SI. So it's up to you if you want to do it at this price or the $31 a month. It's quite a saving. Okay, big saving. And that's that. Failure rate is quite good. Pound's being naughty. Aussie is behaving perfectly in that they've gone, they shorted it and price has gone up. So, you know, green. Ideally, you get things to match. And so they've gone long, but price is declining on pound. Signals, no signals yesterday, but just a reminder, Monday was amazing. We had 189 pips on Monday, which is fantastic. That's my cat again. And technical checks. There's remember, we're only interested in the summary on the daily. Summary daily, you know, and so that's that. Okay, so summary, strong sell, EG, strong buy, dollar CAD, strong sell, Kiwi USD. Economic calendar, PPI, jobless claims. And that's it. So I'm going to wrap up now, and we'll be getting close to the weekend now, so that's good. Hopefully you did okay. Remember, we want to be using probability and statistics before entry, and don't treat it like a casino, because if you do, then you haven't got much confidence. You might as well go to a casino and put your money on red or black and have the same outcome. If we have look at probability and like stats, and knowing how the market works and how traps are placed, then we can enter with that degree of confidence that we should be okay. 65-70% is probably okay. So if you're looking at a sentiment idea, you know that the trap's been in place now, and so the sentiment should play out. However, I would be careful with the pound right now. So that's that. So I'll speak to you guys tomorrow. Have a great day, and let me know if you need any help as well.